You're listening to A Deeper Dive, a part of the Winsight Podcast Network.
What is the story behind Burger King's comeback effort? Hello, this is Jonathan Mays, Editor-in-Chief of Restaurant Business, and in this week's episode of A Deeper Dive, I speak with Tom Curtis, the president of Burger King North America. Tom has overseen Burger King for the past 2 years after coming from Domino's, and he has come at a time when the chain has been in trouble. The brand struggled during the pandemic, particularly after its upgraded chicken sandwich, the Chiking, did not perform well. Struggling sales and high inflation last year proved to be an ugly combination. 2 major franchisees of the brand filed for bankruptcy, and its Michigan operator closed all of its locations. The company has shown some real progress of late, however, thanks to marketing and improved operations and the company's $400 million Reclaim the Flame investment announced last year. We talk with Tom about all of this, how that investment has paid off, what changes in operations the company has made, and how it can keep customers after marketing gets their attention. We also ask why the Chiking did not work. We're talking Burger King on A Deeper Dive, so please have a listen. All right, I am here with Tom Curtis. Tom, welcome to the podcast.
Great to be here, Jonathan, and love your podcast.
Oh, thank you, sir. So let's start with this question. What's going on at Burger King?
There's a lot going on. There's always a lot going on. We went through the fourth quarter and the first quarter, those are kind of the first quarters coming out of the announcement of the Reclaim the Flame plan back at our convention in September. So we're really in execution mode now. But as we've seen the early success that we've reported on, we're also thinking about what are the future steps, because, as far as I'm concerned, this isn't 1 or 2 year turnaround that we're trying to engineer, but I'd love for this to be a decades long story and not just something that spans several quarters.
Yeah. I have to say that, if we go back 4 months, for 3-4 months, right?
I think I can do that.
There was a very, and I knew that, Burger King had started showing some real progress and there was a lot of stuff going on. But if we go back like just 3-4 months, there was a lot of concern about the health of the franchisee base. And that based on a number of things that I've seen and heard, based on things that I've seen and heard, really appears to be like it's almost like the franchisee base has sort of stepped back from the edge. Is that fair?
I think that's a fair characterization, and you said 3 or 4 months. For me and the franchisees, these things, the awareness of these things lags the actual occurrence of these things. Mm-hmm. Really, for us, our franchisees and my management team here, about a year ago, we knew that we needed to do something bold, something ambitious. We wanted to for the business's sake anyway, because, we love Burger King and what it's built on, but we also knew that the P&L needed to improve. Not only if we wanted to see this brand grow, but if we wanted to see some of these franchisees survive. So, we really roll back. When we kind of think back over the past, we think back more on a 1 to 2 year time frame when we all kind of sat down together and said, okay, hey, listen, for the survival of some good people that have been in this business for many decades, and for the betterment of the brand and the progress that we all expect of ourselves, we need to get to work. And although we announced the Reclaim the Flame plan back in September, it was really the culmination of probably 6 to 8 months of, hand-to-hand, day-to-day work with our franchisees to figure out what we needed to do to rapidly accelerate the financial performance of our business and our franchisees.
Mm-hmm. Yeah, I was at the, and I know you know this, I was at the one of the franchisee meetings in Dallas.
Yes.
I can't remember. Again, time has no meaning to me any longer, but it was not too long ago. I would describe it as some real cautious optimism among the franchisees. They were really kind of on board with a lot of what the brand was doing, and while admitting at the same time that there was a long ways to go, that it was that the comeback is sort of in the early innings, but that they were really showing some real progress.
Yeah, Jonathan, you took the words right out of my mouth, and we also talked about this at a recent round of road shows. But what we have now is a lot of cautious optimism. There's a lot of enthusiasm. We're starting to get an air of confidence. The franchisees are because of the progress made. But what we really need to do, the hard part of a big brand movement like this, is how do you stack years of progress on top of each other? So last year, the results in 2022 were lackluster. They were average. We weren't growing as fast as we wanted to or needed to. The end of last year and the early part of this year have been a completely different story on both the sales front and especially on the P&L front. So those are welcome changes. But we have very, very high expectations. People got into Burger King years ago. I know and love Burger King from many, many years ago because it's an iconic brand. It was a challenger brand. It's a brand that's got some amazing equities like the Whopper, flame grilling, having it your way. I mean, really, it's an iconic brand worldwide. And to fulfill our promise, we just have a long, long way to go. Also, if we're going to get back into a growth mode at some point, the cash on cash returns here need to be compelling for those investors. And what I look forward to is a day where I'm not, and our team is not going after franchisees to try to get them to grow new restaurants. I want franchisees calling us, asking us, can they grow and can they build restaurants, because they know what a great investment it is and what great returns they can earn.
Yeah, seems like it's a key and important difference.
Yep.
Yeah. So let's go back to 2 years ago. And what, like when you started out in operations for the brand, and then you were quickly elevated. What did you see? What did you see that the brand needed at the time?
It took a while, and it always should take a while to really evaluate what goes on in the brand. I had a consumer's viewpoint on the brand, certainly even coming into this challenge. But I think spending time here, I looked at the marketing. I needed to learn a lot about marketing, to your point, because most of my career has been in operations. I've had a couple of touches with marketing, but just learning about the brand positioning and all of the different things that we had stood for over the last decade or so, and how those were opportunities for us to come to the consumer in a different way, understanding the way that our day-to-day restaurants operated and how easy or hard it was to execute on the various products and the day parts. I think I learned a ton there about the complexity of operations at Burger King when I came on. And certainly I kind of had this idea already because once again, I've traveled the country and I'm a Burger King fan prior to getting here, but just knowing the condition of the assets and how easy it would be for franchisees and for restaurant team members to execute, just from seeing the restaurants that I visited, and also how appealing they would be as I got off the interstate, or anybody gets off the interstate and has to make a choice on who they're going to go visit. I had a pretty clear and accurate point of view on the condition of the restaurant assets. Where I learned the most probably was on the franchise portfolio and both its strengths and its opportunities. And certainly, as I got here, I had heard that franchisees were, quote, transactional at Burger King. I found that not to be so true. I found it to be true that there were a lot of operators and owners that had been in these businesses for 30 or 40 years. Their families were involved in the businesses. They're involved in their communities. They've got ketchup running through their veins. So they're very committed to the brand and committed to their communities and their teams. So that was a great find. But there were also, it was difficult because they had extremely large portfolios, sometimes for them to be very close to their communities and their team members. And so I saw that as perhaps an opportunity as well. Perhaps we could invite some smaller operators into the business that could be closer to their communities, and maybe that would be an avenue and a path for improvement as well.
Let me ask you about that, because I think that was one of the more fascinating things that has come up, and it probably, in my opinion, really doesn't get the attention, because that'd be a substantial change for Burger King. You have some of the largest franchisees in the country, in the world, actually, in your system, and to shift from that to a scenario in which your franchisees can get to each of their stores in a drive, which is what Josh said, is a major change for the system. And but you're not necessarily talking about breaking up existing franchisees, but that's sort of the go forward plan. Is that correct?
Yeah, that's correct. So I think the way to think about the evolution of the franchise portfolio is that we now have the right aspiration. Once again, operators who know their team members, operators who are ingrained in parts of their communities is the right aspiration. Now, why do we want that? Because that generally drives the best culture, the best operations, and the best outcomes for guests. But if that's the outcome that we're looking for, if we have a large operator that's capable of doing that, there's no reason for us to have any desire to dismantle that or to take that operator and push them to sell restaurants. Some of our absolute best operators are operators who have 100 or 200 restaurants. And if they're capable of, once again, producing the outcomes that we're looking for, then we don't need to mess with their portfolio size or where they operate, because there's not a problem to fix. So I think that, even a lot of our Carrols, the folks at Carrols, that's our largest operator, asked after this last earnings cycle what we meant by that. What they were really looking for is some reassurance that through great execution and through having a great team that operated well, that they were going to be able to remain the size that they want to be. And once again, these things can all change over time, and franchise portfolios are always evolving. But once again, I think it gets back to the aspiration versus trying to say, okay, it has to be X, Y, or Z. What has to be is the outcome of better guest experiences and being better stewards in our communities.
Yeah. Yeah, I mean, I've covered this business for a bit, and my sense on this is that, on balance, I always think, smaller seems to be like, if you can have, not super small, but like if you have generally smaller operations, so to speak, 50 stores, less, something like that, on balance is better. But at the same time, man, Carrols is actually a perfect example. I mean, on balance, their performance historically has always been pretty solid compared with the overall system. And if I just, there are a lot of very, very good large scale franchisees. Of course, there's also been some historic, very bad problems with large scale franchisees that cause all sorts of challenges. But it just, so it's hard to put honestly, sometimes I just think it's based on the operation, the individual, like if you're a good operator, if you're a good franchisee, it doesn't necessarily matter if you have 5 stores or 500, you could theoretically operate them very well with the right people in your business and the right setup and right strategy, if that makes sense.
And I think that's what's important with Carrols. I know those folks very well. I serve on their board. And what I would tell you about Carrols is they have really an infrastructure of owners. So yes, Carrols is the ultimate owner, but they've got an excellent chief restaurant officer there, Joe Hoffman. He has teams of regional vice presidents and directors of operations in each one of their markets, and every one of those acts as an owner. Now, of course, from time to time they're going to have to make changes, and there may even be changes in their portfolio from time to time. But in general, if you start from the top and you create an ownership mentality, then you can take a big ship like that and operate it very well. And I think that's what they've done a nice job of.
Yeah. By the way, and I think their stock is they're the best performing restaurant stock this year. That's probably, in fact, Carol's stock performance more than RBI stock performance probably shows more faith in the Burger King system on the part of investors than anything you could probably point to.
I think it's also reflective of, once again, the operating P&L. So to see their financial performance improve gives a lot of investors faith that our operators' portfolios in general are performing better financially. So I think, they're kind of a bellwether, if you will, for the franchise P&L, and the results have been good as of late.
All right, so I want to spend the rest of the time roughly talking about Reclaim the Flame, but I first have to ask this question because I have followers that will stone me if I don't ask the president of Burger King North America, why on earth did the Chicken not work?
Okay,
so arguably the best chicken sandwich that was introduced during the chicken sandwich war. Why didn't?
Oh my goodness, it was such a fantastic product when made right and when done right. The trick was there was 21 steps in preparation, and I remember a couple of restaurant visits that I was doing after we launched Chicken, and it would be late at night, and somebody would pull up to the window and order a Chicken. And everybody would kind of look around and say, oof, we just kind of ran out. We got to make one really quick. Really quick could be 19 minutes. And, I think that can work well if you're in the Chicken would have worked well if it would have been the only thing that we made and we were a chicken sandwich company. But we're not. I mean, we are born and bred on flame grilled, great burgers, the Whopper, and having it your way and getting that right every day. And I think as an ancillary part of the menu, the complexity that it took, that was required to create such a great product, really distracted the teams from either executing on our core equities well, and also made it very difficult for them to give it the attention that it needed to be executed as well as it could be. So, we replaced it, I think it was in August of 22, with a Royal Crispy Chicken platform. When we did that, we knew that we had a great product in Chicken. And so our standards were very high on the replacement chicken sandwich. And I would challenge you, and I've seen a lot of bloggers post this, to go put it toe to toe with some of our competitors, and it is an amazing sandwich.
Yeah. All right, super. So let's talk about Reclaim the Flame a little bit, because that was a very, very big, a very big investment on the part of Burger King and the franchisees. How long did it take to develop that entire strategy?
It took about 8 months to really put that together. And if you can imagine the stakeholders that you have to manage, RBI and the shareholders of RBI are the ones making the investment on behalf of the brand. The franchisees have to amplify that investment with their investments and make sure that money gets deployed in a way that creates a better team member and guest experience. So there are a lot of stakeholders that had to be involved there. So it was almost like the BK management team was the intermediary between the franchisees and the board to kind of formulate a collective plan that addressed all the needs of the business. And there were several key big business needs, but did it in partnership so that, the RBI shareholders would get a good return, and also the franchisees would get a good return. As you articulated, there was a point in time where the restaurant P&L was in rough shape, and that from that thought and from that recognition, came the plan around the marketing funds, which were, hey, we'll go first. RBI will go first with some of its resources. And then if we do start to see the progress in the P&L and do reach certain thresholds, the franchisees will be able to support additional ad fund investments. So it had to be sequenced right. Had to be the right connection point with RBI's investments and the franchisees' investments to get it right. And that took some considerable time and some considerable back and forth.
Mm-hmm. It was the marketing piece was pretty important to that. I mean, you had to invest in marketing to get the sales up and start building some momentum behind the brand.
Yeah, I think so. But there was actually a prequel to the marketing investments, which started this past October. Like I said, I've been here for about 2 years. And I think as we knew that we needed to have something bold and ambitious, we needed to start to get the cash register ringing again so that we could start the flywheel of investment back into the restaurants. Before we really wanted to do that, we spent a year simplifying the menu, simplifying our processes, trying to get our promotions right. We, once again, as you mentioned, we moved off of Chiking and onto an easier to execute but excellent chicken sandwich. So we were putting our operational improvements into place probably a year before we even launched the plan, because we knew if we were going to go out there and start talking about Burger King and getting some revisits and some people coming back and trying us again, which we did, we knew that we needed to be there and ready for them with a better experience than we had been executing on in the past. So we saw a ton of improvement in operations the year prior to launching the Reclaim the Flame plan. And, hats off to our operators, because all those simplification measures did help a little bit. I really think what changed the game was having this franchise success system put in place, which better supports our franchisees and challenging them to ignite a culture of operations in our brand. I think our brand was built on a lot of great things, and some of the progress over the years was done through financial engineering. I think that what our operators have been focused on for the last 2 years is having great culture in the restaurants, pride in what we do, pride in our core equities. And that was the prequel for the Reclaim the Flame plan that made it possible to start marketing again.
Mm-hmm. So you had to get operations right to essentially get those restaurants operating better again, to be able to to be able to start marketing and get customers in so that they're getting it better. I mean, that's sort of foundation. That's a foundational thing.
It's foundational, and to be very clear, I don't. In a way, I would say operations is never right, because we're not serving millions of Whoppers a day. We're serving one Whopper millions of times a day. So, you'll never have every experience right. But to the extent that you can get that big ship move toward a very high percentage of experiences being right, it'll help give you a foundation and a brand lift. But, man, I'll tell you one thing. I've been in the business for 37 years. I haven't ever woken up a single day without trying to work on how we could be better in operations. And I think that's the way all of us feel around here. This is going to be something that we wake up and think about every single day.
Right. Yeah. Operations important. People don't get that excited about it, certainly among investors, but man, it's just like it makes a difference. And like the U.S., especially in the United States, the restaurant business is way too competitive to not operate your restaurants well. I mean, that's so important.
Yeah, and that wasn't just a change. Now that I think about it, in our operators and the folks that are franchisees for this brand, but we have to get serious about that here as well, and realize that that's foundational. And to your point, Jonathan, it doesn't always show up in a spreadsheet, and it doesn't show up in a business plan. But boy, the restaurants that execute well, and you can list them off, I won't, but the restaurants that execute at a really high level have multi-year success.
Yep. Yeah. Oh yeah. Just it is very, very much foundational, and you can have the best. And I've always felt, and I've talked about this before, like I've always felt Burger King was really good at getting attention for stuff. Like I don't know, there are not a whole lot of brands that are better at getting attention for a new idea than Burger King is, and is just historically very good. The problem is you have to have the operations to support marketing. And so getting operations in line seems to have been like a key first step. Now, of course, the next step is that you have to, was there any pressure on you guys to make sure that that marketing that you did invest in, that had to hit?
Oh, it had to hit. And I think, the pivot that we made in our brand positioning has been effective. And I think that the additional firepower that we brought to bear in marketing really helped lift us. But I think the brand positioning, which was a pivot from we are Burger King to the guest is the royalty, I think has resonated well. It wasn't a gimmick, and it wasn't something that we did as a promotion for one quarter. It's something that's going to span years and years, treating the guest as king, making sure that, our foundation is the best burger on the planet, the Whopper, and that we have other things that make us interesting and exciting as well. But when it comes down to it, the reasons we were founded are the reasons that we're going to be great in the future. And I think that it's interesting. We just did this promotion around 220,000 ways to make a Whopper, and we had a Spider-Verse Whopper that was connected to that. That was really a masterpiece that was invented by our culinary team. But really having consumers see what we're built on and what we're based on, and especially a younger consumer, which is the one that we know we need to grow with. I think that's going to be foundational, and that's good. And it's not going to be gimmicky, and it's not going to be an LTO, but it's just going to be bringing attention to our core equities and what we're great at in a modern and relevant way that's going to help this business build year over year versus over a 4-week promotional period.
Mm-hmm. Awesome. Tom, this was fantastic. Really appreciate you joining me this week on the podcast.
All right. Well, always great to listen to your podcast, and even better to be a part of one. Thank you, Jonathan.
And that should do it for this week's episode of A Deeper Dive, which was edited, as always, by Kimmy Spoons Kazmarek. Artwork by Nico Hines. You may find this and other episodes of the podcast on our website at www.restaurantbusinessonline.com/article/deeper-dive. You may also find them on Apple Podcasts or Spotify or anywhere else you get your podcasts. I'm Jonathan Mays, your host, podcast producer, and the editor-in-chief of Restaurant Business. Thank you for listening.